Here with the F&O show, it's been holding on to that 5400 mark in trade. Did make an attempt to scale up, 5444 thereabouts, and now again it's flattened out in trade, 5417. So it's about a 35 odd point band that the Nifty has been trading in from the highs to the lows of the day. What's holding up? MTNL, India Cements, Voltas, Balrampur Chini seeing some covering. Wipro ran backseat from the frontliner names are looking good as well. Biocon, Polaris, you've got a Hindustan Zinc, which is for a second day on the trot, holding up in trade, and Divi's Labs as well is looking good. On the flip side, there's weakness coming in for Opto Circuits, which is now lost about almost 13% on last count. Escomars as well. Seems like there is some case of pledged shares again propping up, so 8.5% down. Adani Port, Mcleod Russel, Jet Airways, because it now seems that FDI in aviation has been put on hold. PFC, Pantaloon, OnMobile Global, VIP as well as Power Grid are your other losers in trade. Let's quickly then welcome in our experts on board, C.K. Narayan, Mitesh Thakkar as well as Sandeep Pagle. Mitesh, let's start off with you first. What's the index strategy that you're adopting right now?
I think what is happening, typically is that after the breakout, I think the index is very subdued in the sense that we are not seeing real momentum on the upside, and practically, I can say that index is going nowhere. So I think a good way for a trader to use index is to possibly use it as a hedge by taking some kind of option spreads. And I would suggest buying into a 5,400 put and selling 2 of 5,300 put expiring August. Now, if you do this kind of spread, you will have to shell out a premium of about 8 to 9 rupees. The good part of the strategy is that it will be a perfect hedge for people who are trading on the long side in the stock segment. If the market keeps going up from here, I think the loss is limited to about 9 rupees of premium outflow which happens. But otherwise, if the market was to correct, this strategy will be profitable in the range of 5390 to as low as 5210, with maximum profit coming around the 5,300 strike. So I think that's the way to trade index. For the time being, index itself is lacking momentum. So therefore, instead of trading it out, I think it can be used as a good hedge.
Sandeep, hi afternoon. What's the strategy that you're adopting, considering we've flattened out from where we were holding up around 5440 levels?
Absolutely, Aisha. 5460 is what we thought would be the target today, which has come. But at the same time, we also said that I felt that there won't be momentum which will take it forward to 5500 plus, and exactly that is what has happened. On the other hand, I don't see weakness which will take it down by another 100-120 points. So you can't even short it at this point of time. I see the range as 5400 on the downside, 5460-70 on the upside. So really there is nothing you can do with the Nifty. You have to be stock specific. We continue our call of being stock specific, our view of being stock specific. And there are good moves in some stocks both ways. So you can play the market both ways. So in that sense, I would want to leave the Nifty alone for the next couple of trading sessions. Let us watch, possibly let's take the view in the next week or probably even in the next expiry. And there is nothing, we have advised clients to just stay away from the Nifty as of now.
Sandeep, let's revisit the stocks that we've been chatting about and ran back. See, given the kind of strength that the stock has been showcasing, is there still room to go long?
We had a buy yesterday at a level of around 528, 530, and we have booked profits in the range of 545, 550. I think it made a high of 553, 54. Still some more upside to the tune of 565, 570, but then the risk to reward may not match at this level, specifically keeping in mind that the Nifty is not willing to go up one way. There will be, the stocks will not move up one way, it will be a slow move. So at this level, I won't take a call. I mean, at a level of 530, the risk to reward was very much in favor of the bulls. At 548, 550, I'm not that comfortable for another 10, 15 points, which I see that. So if somebody is on it, already in it, one can hold on. But a fresh trade at this point in time, not so comfortable.
Anand Kuchalan as well joins in. Anand, how are you approaching the market right now?
After a long time, you have seen 5400 being breached yesterday. Last series also, I think couple of times it has tested those levels but managed to close much below that. So I think that's a kind of a psychological positive thing which has happened on the market front. So I believe 5400 will not be an easy thing unless there is some major trigger to break on the downside. So any correction, if the market is up today, probably if you get Nifty in the range of around 5415, 5430, you could go long, keep a stop loss of around 5390 and I think 5550 to 5500 to 5550 should be something which one should look at for target.
Okay, like we've been talking about, there is strength for Ranbaxy coming in, and out of the IT pack, you have Polaris as well as Wipro as well, which are holding out. Mitesh, what is it that you're witnessing on the charts for some of these IT majors? Infosys, which showed traction yesterday, today as well, the stock is just about holding out, and Wipro, which has really been on a tear today.
See, I think, Wipro is a different case in the sense that it is where Infosys was a few days back after a big fall, going through a minor base building, and today it's giving some kind of a breakout. My sense is that it's starting a corrective rally which can take it up to as high as about 380 to about 385 on the upside. So still remains an interesting stock to look into, can be bought with a stop just below 358. Of course, the other one is TCS, which we have talked about on and off. The stock keeps on making newer highs, and we have had recommendations on this stock for last few days. I think that's the stock which is leading, and in fact in the entire Nifty movement, it's the Cerex IT which has gone into the outperformance mode, and I think that's where the action would be in the next few days to come by.
Okay, let's slip into a quick break on that note. When we come back, we'll get you stock ideas from our three experts as always.